Good morning, Rupert.
Hi, Leticia.
On Monday. Hello.
Hi, Mandeep. How are we doing?
Hi guys. Yes, good.
Yeah, I was just waiting a couple of minutes in case there was anyone else, but nobody else is here, so we're going to make a start. So I'm going to mute you both now and make a start. It's being recorded as well. So great. Okay, so this is the final structured lesson on bookkeeping and taking finances in-house for this series of sessions. We can do further sessions in the future, and particularly if we get questions, we could do another session next week in order to deal with any questions that have come up. So we could have a general chat and a question and answer session. But in terms of structuring the sessions to an agenda, this is the final one. Referencing back to the end of the last session, we were looking at fixed assets, and we looked at the application of furniture in a property business. I didn't want to commit online without double checking whether or not it is appropriate for you to run depreciation on furniture, or whether furniture just literally goes into the overall building costs and sits there. But it is perfectly fine to depreciate furniture. So if you were to add furniture to an HMO, for example, then the cost of that would go into your fixed assets. You'd allocate it to your fixed asset register, and then you'd run the depreciation from that point of view. That clears that up. Today, I want to have a look at the chart of accounts, and in particular, I want to have a look at payments, how things get paid for in Xero, and how we can use the payments to deal with a number of different scenarios that regularly crop up. So I'm going to share the screen. And I'm going to go to the chart of accounts. First of all, I'm going to show you a bank account, which is here. And this is where you can set up different bank accounts if you need to. So when you add bank accounts, you can then set them up here. Bank accounts automatically allow payments to be made to them. In other words, when you go to pay an invoice or pay a bill, having approved a bill, then you'll see that all the bank accounts are listed in the drop down, and you can choose which bank account it's paid for. But you can actually make any account an account that can be paid to. And I'm going to find an example of that further down in the balance sheet section of the accounts. For example, I'm looking for some intercompany accounts here. Here we are. So, for example, a director's loan account. You can click this box here to say enable payments to this account, which basically means that if you are to enter a bill, you've bought some goods and you've bought the goods for the company, but you've bought it with your own money, and you're not planning that the company is going to actually then make a bank transfer into your personal bank account for that same value. You don't have to do that. What you can do is you can actually make the payment directly to the director's loan account. So you go into the account itself, you open the account and you edit the account details, and you click this box here that says enable payments to this account. And what that does is it means that director's loan account will also appear in the drop-down list under payments. So I'm going to demonstrate that. So if I go to enter a bill, once you've approved the bill, you get the payment section. And normally you would choose the bank account that's been paid by, or whether it's been paid by petty cash. Okay, but if you have ticked that box in the account, and as you can see, I've got a number of accounts down here that you've ticked that I have ticked the box on, you can then pay that directly to your director's loan account. So at the end of the month, that will appear on the balance sheet under director's loan account, and that effectively means that remember, you paid with your personal money. The company hasn't repaid you, okay? It's just put it down to director's loan account. So effectively what you're doing is you're making a director's loan to the company for that value, okay? And that's perfectly fine to do. There's not a problem with that. You can always withdraw money from the company and code that withdrawal to the director's loan account, so long as your director's loan account does not go overdrawn. In other words, it doesn't go negative on your balance sheet. Actually, you are allowed for it to go overdrawn, but for only 9 months after the year end. And this is something that is more to do with tax and your accountant than it is to do with the bookkeeping side of things. So the opportunity here is to actually pay a bill, not by your bank account, but pay this because the bill has been paid by another bank account that is not involved in your zero here. In this case, it's director's loan account. Okay, so the main thing I wanted to show you there is how you can get accounts to show in this drop-down list. And now I want to go through a couple of examples on top of the one I've just given you as to why you might want to do that. So if we start with a scenario where you have not been charged for energy, and you know that you're going to be charged for energy, let's say it's electricity. But the electricity company is toing and froing and messing about, and you haven't had a bill from them for months, and you know that in the future you're going to get a bill. So when you're doing your monthly accounting, really you would like to see the cost of electricity being reflected in your profit and loss. Otherwise, it would make your zero look a little bit more profitable than it truly is. And the worst thing you want to avoid is that when you finally get that bill, if that bill is for 6 months worth of electricity, you don't want to be showing a loss in the month that you paid the bill. Okay, by putting in a very large cost in that month, not having any costs in the previous months. So we use a method called accrual for that. An accrual is an accurate estimation, I would say, of what the cost will be. So if you decide that the cost is roughly going to be £100 a month, then you could make an accrual for the £100 a month. In some cases, you might know exactly what the bill is per month, but it's just that the bill comes 6 monthly in arrears or 3 monthlies in arrears. So you would make your accruals. So given that in Xero you've got nothing to work with, you've got no paperwork or anything, this is something you have to initially just create from your own knowledge that that cost is being generated. So in that case, the simplest thing you do is that you would just create a bill. Okay, so if we if we said it's from Scottish Power, okay, and you can date it as long as you date it within the month. So you might want to be consistent with the way you date your accruals, and you might want to date them on the last day of the month each time, although it doesn't really matter. Okay, so you're entering in electricity, and you're going to enter £200 of electricity in for that month. Okay, you can apply that to a property if you wanted to. So you've approved that bill. What's actually happened is your electricity account has been debited on the profit and loss with £200. So your profit and loss will show a cost of £200. By pressing that approve button that I did a minute ago, that credits the accounts payable account because it's expecting that the amount will then be reconciled to the bank, and then when it reconciles to the bank, the £200 would then be debited from the accounts payable and credited to the bank. Okay, so at the moment we've got £200 debited to the electricity account on the profit and loss, credited to the accounts payable. But if you then pay that amount here, and you say you've paid it from an accruals account, which I'd previously ticked the box on in the edit account section. This is account 805, okay, and then you add payment. It's now taking it from accounts payable and putting it into accruals. So it now sits as a debit in electricity and a credit in accruals. And we have a look at that bill, there it is. Okay, so it's debited in electricity, it's been paid, but it's been paid not to a bank account, but it's been paid to an accruals account. Okay, and you could do that every month. In fact, when you enter a new invoice, if you wanted to, and I'll just show you once more, when you go to enter that bill, okay, you can enter a new repeating bill. And you can say repeat this transaction every month until an end date. And you can then put in the same amount there, and then that bill will be created and generated every single month. But it won't be paid every single month. So it will be sitting in awaiting payment. And you'd see that those bills each month would sit there in awaiting payment, and then you just go into awaiting payment, you'll open the bill, and then you pay that bill to the accruals account. Okay, So what's now happening is that every month your profit and loss is showing that £200 electricity cost, and your balance sheet is accruing £200 every month, okay, and increasing on a cumulative basis until you finally get the bill from Scottish Power, okay, and when you finally get the bill from Scottish Power and you enter it in here, instead of entering it to the electricity account, because the bill now may be 6 months worth, so it might be £1,200, and you've already put the £200 into your profit and loss every month previously. So you don't want to put £1,200 into the electricity bill because that would be double accounting the electricity. So what you do is you put that £1,200 to the accruals account, and now you're debiting the accruals account to the exact value that you previously credited it to, bringing the accruals account back to zero. It's probably going through your mind, yes, but you estimated the £200 every month, and the actual amount was £1,263. Well, in this case, you would put the £1,200 debited to the accruals account, and you put the £63 debited to the electricity account. Okay, so it is bringing the accruals account back to zero and then putting the surplus to the profit and loss. And if it's not a surplus, if it's a deficit, you can do the same by entering a minus in there. So when you get the bill, you clear your accruals account back down to zero, and that way you've already accounted for those costs across the month. So this is another way we can use these payments. Is there a question?
Yes, I actually have this kind of situation with one of the electricity providers, and what happens if they never come back to you? When you really you have the cutoff point, and take it from accruals, take in and clean your balance sheets and your accounts.
Yeah. So you need to make that decision. Once you've made that decision, you're never going to get billed. Okay. Then what you're actually saying is all of those cost accounts that I've debited every month were false. These accruals should never have taken place because I haven't incurred that cost and I'm not going to incur the cost. What you can then do is you can then go to your bills, and you can go to all the bills, okay, and you can search. So if it was that, and it would list all of those bills that you've paid.
Yeah.
And then you can open each one and you can void the bill.
Okay.
Okay.
But it's very much a question of you make that decision, and do you think that a company, a supplier can really come in 1 year's time, 2 years' time and really bill you?
Well, if you think that the supplier is still, if the matter is still open, then you should leave those accruals in place. Because for your accounts and your year-end accounts, those are costs that are rightly incurred within the year that are not yet paid. Okay, so you do need to leave those costs in place, and those costs will reduce your tax bill because they are true costs that have been incurred. Now, the following year, when the payment happens, then that's all well and good. Everything is corrected. If there becomes a point in time in the following year, or even 2 years later, when it is officially clarified that the payment is not going to happen, or if the payment is different to the amount, then an adjustment is made in that particular year that you're standing in. Okay, and your accountant will help you to make an adjustment and credit that amount. So if you have paid less tax as a result of putting these accruals in, and then you realise a year or 2 years later that actually those accruals never needed to go in, then your correction in the future year will increase your profits in the future year and increase your tax bill in the future year.
Okay.
Yeah.
Thank you.
So that's how we operate with accruals, and it's quite common in property to operate with accruals, and energy is a particularly good example of that. To be honest, you have to make your own judgment on that. How much is it worth? What value is it worth accruing to? And the complexity of it, and what value can you suffer in any one month, a larger bill that might be for a 12-month period. So clearly you don't want to accrue every singular bill that doesn't come in every month, and it has to be really something that would make a significant effect on the profitability when the bill does come in order for you to accrue it from that point of view. So, and you might, it's entirely up to you how you do it within your own bookkeeping. So if you don't want to accrue it every month, you might want to just accrue quarterly, so that 1 month takes a quarter of the cost in. And then there's no cost for 2 months, and then there's a quarter going in. It does depend on value and significance of the final bill when you get the final bill. So I'm going to come on to the opposite now, which is something called prepayments. Before I do, I'm just going to show you the accruals on the balance sheet. Okay, so here we are. The accruals are a liability, and they fall under the current liability. They're very similar in a way to accounts payable. The accounts payable is, you've had the bill, you're waiting for it to hit the bank account. You may not have paid the bill, or you may have paid it, it's not hit the bank account yet. The accruals, well, that's one step back. You know you've incurred the cost, but you've not yet had the bill. Okay, so it's energy consumption that you've had, it's a cost that the business has incurred. Okay, if the business shuts down tomorrow, you're still going to have to pay that bill in the future. You're still going to get that bill in from the energy supplier in the future. So it's a liability to the business. Okay, so your accruals are current liabilities. On the flip side of things, I want to talk to you about prepayments, which, as you can see here, are current assets. Okay, so a prepayment, as it happens, I've got one literally on my desk today, so I can actually run through this as a live example. So I'm going to go to enter a bill, and I'm going to find my prepayment in my file library, which is my insurance. So the insurance I'm paid yesterday, and it's for a year in advance. Okay, so I'm going to add that file, and here it is. So it's to Alan Boswell. I paid it yesterday. It's dated the 14th. Okay, I paid it on the 28th. Okay, it's for insurance. And the value is, it's already recognized insurance. It's clever, Zero. It's known that I've put Alan Boswell in the past, but I've got to double check because it can get it wrong. Now I could enter this in per property. I've got a schedule here, look, of all the properties there. So I could actually apportion this to each individual property by putting in amounts in each line that add up to 181453. I might do that, but not just now. Okay, so now I've approved that bill and it's been paid. Okay, so that would be the cost and here, when I paid it in the bank account, okay, it will then appear in the bank account. And what that means is that in May, I have a cost of 181453 for insurance. Well, actually, I've got another insurance bill for some more properties as well this month. So if I add that to it, I've got £3,500 of insurance costs. That's quite a big cost to swallow in 1 month of bookkeeping and could significantly affect the profit. So what I can do instead of putting it to insurance is I can put it to prepayments. And that way, this amount will not go into my profit and loss. Okay, so I'll update that. Okay, and I know that it was paid yesterday, and I know which bank account it was paid from, so I can add that payment. And now it's waiting for when I reconcile the bank account. So it's dealt with, it's done. Except for the fact that you're not going to see any of that bill in the profit and loss. You're going to see it in the balance sheet. Let's just have a quick look. Prepayments. There it is. So my prepayment there is 181453 to Alan Boswell. So on the one hand, it's debited prepayments, okay, which is an asset account. And on the other hand, it's credited the bank account. When I reconcile the bank account, it'll all be reconciled and done. But I won't see it at all in the profit and loss account. So we're not quite there yet. Okay.
How do you have? I have a question on this one. What happens if it's the other way around? So you get a one-off bill for the year, but you have agreed to pay in installments, but you only have that kind of bill. How do you reconcile? Where do you put this kind of one-off bill?
Okay, let me come back to that.
Okay, thank you.
Okay, so we've paid the bill, we've paid it to prepayments, and now what we can do is we can consider the monthly bills for insurance. Okay, so we can say this is, we could call it to prepayments if we wanted to. We could call it Alan Boswell. Okay, end of the month, it's fine, end of the month is fine. But in here, I only want to put in 1 month's worth. I could have set up, as before, a recurring bill for 12 months, which probably would be the right, as well, a good way of doing it. Or each month I could pay a bill here. So we'd say insurance, okay. We say that the unit price is 15121, which is the value divided by 12, okay. Now, this is debiting the insurance account and going into the profit and loss. So I'm going to approve that. And now we can go and pay it. Now I've set up prepayments to show in this drop-down list. So with the date paid, and we pay it by prepayments, and it's paid. So now it's in the profit and loss account for the right value for the month. It's not sitting waiting to be reconciled to the bank account, okay, because it was paid by prepayments and not paid by one of the bank accounts. Okay, so let's see what the effect is on our balance sheet. So we go to prepayments. And now we can see that Alan Boswell's insurance was debited in prepayments at 181453 and credited at 15121. Now, if I go in every month for 12 months and do that, then that and these will basically counter each other out to 0. Alternatively, which would be much more sensible, is that rather than going every month, is that I actually go in once and set up a repeating bill at 15121 for every month. And then I have to just go in once a month to pay that bill, because repeating bills don't automatically get paid, they just get generated. Okay, so you would basically go into the awaiting payment section of bills, and it would appear here. If it was a repeating bill, each month a new one would come up every month, and I'd click on it, and I just then pay it like that. So this is making use of accruals and prepayments in order to spread the costs of your business accurately out across your profit and loss across the right months. But it is important, if you're going to use this system, that you go into the accruals account and you go into the prepayments account and you tick that box in the edit account in order to make payments to that account, and that enables you to do it that way. So the question is, I have a bill, but I'm actually paying that bill by installment every month. Is that correct? Leticia, is that the question, that you have a bill which you're paying by installments every month?
Yeah.
Right. So let's say the bill is £1,200 for the year, and the supplier is happy that you pay £100 every month. Yeah. Obviously, you would set up maybe a direct debit or a standing order for your bank. Okay. So the money would go out of your bank every month as £100. So that makes life pretty easy for you, because then all you have to consider is, how do I reconcile that amount in the bank every month? So if you went into your bank account and you saw that £100 was spent, and every month you see that £100 gets spent, standing order for example, then you can set up a bank rule, or you can just literally reconcile that £100 each month, and that £100 will directly go into your profit and loss in the correct month.
And I just reconciled with the invoice somewhere here in the...
So a really good example of this is council tax,
yeah.
where you might get the council tax bill once a year, okay, and then what you can do is, the first time the council tax direct debit is showing in your bank account, here's one here, okay, you can reconcile that, and when you reconcile it, you can actually append the invoice to it from the files, okay, but you don't want to then have to do that every time. As long as you know you've got that in there once, that's sufficient for your records. You can always find that again in the future.
Okay. That was really my question, is that where do I put that kind of invoice, where I attach it to?
Yeah, you would attach it probably to the first payment. I mean, you could, if you really wanted to, you could email that invoice to your Xero 12 times and attach it to every payment, but I wouldn't do that. There's no need for doing that.
Okay.
I would answer that question slightly differently if you were VAT registered and that was a VAT bill, and you were paying the VAT bill, you were paying the bill in installments, because it's very important in Xero that the invoice date that you put in, okay, is for the amount on the invoice, the full amount on the invoice, even though that invoice might be paid in future installments. Otherwise, you might be applying those values to the wrong VAT period. So I would say that as long as you're not VAT registered, then what I've said works perfectly. With council tax, there's no VAT on that in any case. But just be mindful for VAT registration purposes, then the invoice date and the invoice value as is stated on the bill does need to be entered correctly as to the bill, okay, in order that the VAT either gets paid or reclaimed based on that date within that VAT period, which is generally quarterly, the VAT period. Okay, so we've used this function of payments, not only then for paying by the bank account, but also by using it for accruals and for prepayments. What if you had two companies? And what if from time to time you'd use the bank account for one company to buy goods for the other company? Or what if you used one company, you bought a bulk of toilet roll and you split that in two and you used it, half of it for one operation in one company and half of it for one operation in another company. So there are times when you need to actually split costs across different companies. Okay. So remember with zero only recognizes one company at a time. So you can't add another company in there. Zero doesn't know what's going on in another company and will never connect directly to another company. Okay, so if we take a look at the balance sheet again, what we can see here are intercompany accounts. Okay, and here I've got one with Fab Clinics. Okay, here I've got one with some different companies of my that we have. And the balances of those intercompany accounts is basically who owes what. And a lot of the figures look very big, and don't get too concerned about that. But basically, in this case, it's a liability. So in this case, this company here, RC Woodhouse, owes money to this company, owes £251,000 to it. Okay, but is owed by this company this amount. Okay, so these are, in a way, they're similar to bank balances up here, because here this bank owes this company this amount because that's how much it's holding for the account. Okay, we're quite happy to entrust the bank to hold it for us, but in reality what that balance means is the bank owes it to us. Okay, so because these are liabilities and these are assets, it's showing the other way around. This company owes that, it's a positive figure, but it is owed that, it's a negative figure. Okay, so I'm going to show you the intercompany accounts in a slightly better example, that if we were to buy those toilet roll, and basically you've gone to Costco, you've bought a trolley full of things, of which there's some toilet roll, and the toilet roll is the only thing is for the other company. Everything else you bought in the trolley is for the company that's paying. Okay, so this company has received and is using the toilet roll, so it's going to put it down as a bill. Okay, so I'm going to put from Costco. Okay, then. Okay, so we have. Okay, and from that receipt here we've got £40 of general expenses. Okay, So we put it into our profit and loss on this company. We've accounted for that £40 of toilet roll that we've brought and used in this company. But we know it's not going to appear in any of the bank accounts of this company because it was paid by the bank account of another company. And the bank account of the other company isn't showing in this zero company. So long as we've ticked that box to enable the account to be used as a bank account, then we can say, okay, it's paid from the intercompany account of FAB. And by adding that payment, then we will influence that balance that you saw earlier on the balance sheet. So it goes into the profit and loss account, and on the other side of it, it goes to the balance sheet, to the intercompany account.
You don't have to touch any invoice or anything.
You can, yes, you should really attach the invoice as well. Even though the invoice might be for 50 items from one company, you might highlight the £40 item and pop that on there.
Okay, thank you.
So that becomes important when we come and do our month-end routines, because when you buy something and it's paid for by the bank account, we know that everything in zero is initiated and controlled by the bank account. Everything in bookkeeping is initiated and controlled by the bank account. But if we just leave that as that, okay, we're making quite a big assumption there. We're making an assumption that we were correct, that that toilet roll was paid for by that other company and was £40. But we have no proof of it in this company here, because we have no bank account to control it to. Okay, we could create, if you had an employee doing your bookkeeping, can imagine what they could create here and just stick it into intercompany accounts, or stick it into accrual accounts, or stick it into what I call these dangerous accounts, because you can hide things. You can put credits in the profit and loss. You can put sales in there against these accounts. So you could basically manipulate your performance reports hidden away in those liability and asset accounts. So at the end of the month, actually, not only are you reconciling your bank accounts, which is the control, but you should always go through and control your balance sheet accounts that are relevant to this. And these are all the accounts that I've talked about today that you're using that influence on the one side the profit and loss, and on the other side they influence the balance sheet, but not the bank account. You need to control those accounts as importantly as it is to control your bank account. So the final thing I'm going to go through today is your month-end routines and how you go through your different controls.
Rupert, before that, you know this example with the toilet roll, this bill, thinking is in the company that used the toilet roll but didn't buy it. Is that the case?
So the toilet roll was used by this company here.
Yeah.
It was bought on behalf of this company here, but it was paid for by another company's bank account. In other words, FAB, Barclays FAB, paid for it. And Barclays FAB bank account is just not existing in this zero here. It's existing in FAB zero, which the two never connect.
No. But would you have an invoice in the other company?
Well, you would if you bought other things in the other company. So what you could do, you have two choices really. Let's say you only bought the toilet roll. Okay, but you bought it with the other company's bank account for whatever reason. You could, when you enter it into the other company, because obviously you've got to reconcile the bank account on the other company, so you'd reconcile that to intercompany with RC Woodhouse. It's not essential that you put that invoice into the other company, because the other company is just paying on behalf of. Okay, it's not a cost to that other company. So for the purpose of audit, for the purpose of VAT and such and so on and so forth, you know, the invoice is not relevant to the other company, and so it's not essential. But you could, if you chose to, for your own reference, just attach that invoice and append that invoice to the other company. But of course, it is relevant to this company, and you would attach the invoice to this company.
Okay.
Or receipt or whatever. Does that answer the question?
Yep, thank you.
Yeah, brilliant. So just coming on to what you do then, at the end of the month, to ensure that, and you know, the big exciting mistake that everybody does at the end of their month is that you look at their profit and loss account too soon. Okay, you must make sure that everything is done before you get tempted to look at your profit and loss account. Okay, don't look at your reports until everything is done. So I'm going to send you a checklist of what you do at the end of the month. Okay, but in order to go through this on the screen share, I'm going to just read out the points of the checklist and then show that these points to you here in Xero. So the first thing you do is that you check your actual bank accounts to your Xero bank accounts at the end of the month. Okay, so if we have a look at this, you go to bank statements, you take, this is the 29th of April, which is the final day bank entry of that month, okay, and we've got a balance of 10 grand, 55316. So I would go to the online banking of this bank account, okay, and I would look at the balance on the statement and I would control the balance of the statement. What that tells me is that all of the lines that are on the statement are actually here in Xero. And even with automatic bank feeds, okay, even with automatic bank feeds, I have had experience where 2 or 3 lines have not been fed in to Xero for whatever reason. So it is a control that needs to be done, not only when you're manually importing bank statements, but also for automatic bank feeds as well. The next thing you do, which is the fun thing to do, is you reconcile all the bank statements. Okay, so let's go to one where we've still got some here to reconcile. There you are, I've got 7 to reconcile here. And the more automation you've put in with bank rules, this green means it's that invoice that I've already entered. There it is. It's already there. I paid it yesterday. Here it is, look. So it's already fed in. It's green there. I only entered that during the course of this session and I can reconcile that. So I go down and reconcile all of these items here. Okay. Once you've reconciled all the bank statements, you also go into the account transactions for each bank. Now, these are the bills and the invoices that you've entered during the course of the month, okay, and that you've either marked as paid, well, you would have marked them as paid by that bank account, okay. And what you do is I click that twice just to up and down, bottom to top, top to bottom, to make sure that there's nothing reading unreconciled, okay. If you sort them by status, then unreconciled will always show at the top. So I know that all my account transactions are reconciled. So what would it mean if there was an unreconciled account transaction? Well, if it was correct, what it would mean is that the invoice was maybe entered on the 30th of the month correctly, okay, but it's not going to appear in the bank until the 1st or 2nd of the next month. And you've only reconciled up to the 31st of the month. So it would sit there quite correctly as unreconciled. So you'd look at that transaction and you say, well, I know that that's unreconciled because I haven't reconciled the bank beyond the end of that month, and it's going to appear the next month. But if you had some transactions during the middle of the month that were unreconciled, then that would raise a question with you. You say, well, hang on a minute, I've reconciled the bank, all the bank statements have been reconciled, and I've got a transaction here, which was an invoice I'd entered, that hasn't appeared in the bank account, and it should have done. So what that commonly is an error, user error. It's commonly an error that you entered the invoice when you got the invoice. You marked it as paid by that bank account, but for whatever reason, when you came to reconcile the bank account, it didn't come up as green, it didn't automatically show there. So you thought, oh, I must have missed that one, I'm going to enter it directly from the bank account. So we go back to reconcile here. Okay, here it is, here's one here. Okay, well, there's no green there, so I'm going to create this transaction because I obviously haven't entered the bill for it. This is the plumber. Okay, so I'm going to type the plumber's name in and I'm going to choose the account and I'm going to click OK, and it's done directly from the bank account. But what if I had actually previously entered that invoice, but maybe I had entered it 808 instead of 880? It wouldn't have then come up green. Okay, what if I'd paid a different amount to the invoice? So that's where it would show your error, because it would show as unreconciled. Okay, account transactions, it would show as unreconciled. The 808 would have been in here, even though I had entered it again. So when you go to your profit and loss, you'd have 1600 in instead of 800 in. So that's why this is an important control. With petty cash, you come up to account transactions. Because you don't have a bank that sends you a petty cash statement, you are your own petty cash bank in that regard. With petty cash, everything you put shows up in account transactions. Okay. You haven't got an automatic feed into bank statements to reconcile the two. So what you actually do is you just basically, you're happy with your account transactions in petty cash because you've entered them all in, and you have to then manually reconcile them in order to make them or put them into the bank statements. So with petty cash, you actually, if you're happy with everything, you then mark it all, and you mark them as reconciled here. Okay, and once they're marked as reconciled, then they will be showing up in your petty cash statement with your petty cash balance. Okay, so nothing would show here. When you do your petty cash entries, they only show here, and they only then are made to show as a statement with a balance here once you have marked them as reconciled. So that's slightly different with petty cash, because you haven't got two sides to reconcile together. You've only got the one side, which is the account transactions that you've entered. So you have to force them into becoming bank statements by reconciling them there. Moving on. So we've dealt with the bank. We've controlled that 0 is the same as the actual bank. We've reconciled the bank. Go back to our dashboard, and the next thing we do is we look at the bills and the invoices. It doesn't matter which way around, and you go to awaiting payment. Okay, and you look at everything that is awaiting payment, and you basically go down them one by one and you look at them and you say, is that right? Is that correct? If it's dating back to earlier in the year, why haven't you paid it? It's a bill you've entered, so you must have received the bill. Why haven't you paid it? Oh, because I'm letting that supplier hang on, or I've got a dispute with them or whatever, that's fine. Not a problem, leave it there if you think that the amount is correct. Oh, that's strange. What's it doing sitting there? I'm sure I paid that bill ages ago. Okay, double check, look in your bank account, see, yes, you had paid it. It must be entered twice for some reason. So you go in and you void it. Okay, and so you do your control, because these bills awaiting payment are influencing your profit and loss account. So if they shouldn't be there, then your profit and loss account is wrong. Okay, exactly the same with sales. Okay, so invoices owed to you, waiting payment. Okay, so these guys here owe me, you know, I've entered the bill, but I haven't had the money. Okay, so what's going on there? And in this case, it was a bill that was entered at the end of April, and it was due in May, so it would have hit the bank account in May. So I'm perfectly happy with that situation. So there's nothing wrong with them being here, but you need to control and make sure that what is here is correctly here and justifiable and explainable. The next thing you do is you go to your fixed assets. Okay, if you've entered that furniture, okay, it will appear here. Unfortunately, in that company, I don't have an example. If I go into another company, okay, great, I've got one. This is one I did for an example for you at the last session. So we've got this machine that I entered as a fixed asset. So remember, I entered it normally as a bill, but I coded it to a fixed asset account. Okay, so let's have a look at it. Okay. And it automatically set in drafts because it went to a fixed asset account. Okay, and it's given it a fixed asset number, it's got the pricing, you enter the different information that you wanted to enter into it, you choose your depreciation start date, okay, and you choose your depreciation method, straight line is the normal one, okay, and so on. Okay, so you're going to have 4 years, and then you register that asset. Okay, and once you've registered it, it will sit in your fixed asset register. At the moment, it's a draft because you might want to say, oh, I've made a mistake there, I don't want to register that, that's something wrong. Okay, and here's the list of all the registered assets. Okay. And once you're happy, you run depreciation. And it basically says, do you want to run depreciation for May? You say yes, and it does it. That's all you have to do. Nice and straightforward there. Then you need to check your liability accounts. So we've already mentioned it in the balance sheet. There are certain liability accounts, there are certain asset accounts as well, like prepayments, okay, and your accruals, okay. These are the accounts that you need to double check because these are where you could be hiding stuff. You could be influencing the profit and loss and not having them in the bank account and having them in these accounts instead. Okay. Now you can do it directly from the balance sheet, just literally by clicking on that, and you can see the breakdown of that account there. Are you happy? Yeah, that all makes sense. I'm happy with what we've done there. Those accruals, I'm good with those. We'll leave them there. Okay. Alternatively, you can go to General Ledger. And this is really the better way of doing it because it breaks it down per account, and you can take a much more detailed look. So first of all, you're interested in a period of time, okay, and it will only show accounts that have been influenced in that period of time. So if we deal with April, okay, it's reduced the list of accounts because these are the accounts that have been influenced in April, okay, and you go down. And this is every account, and you go down and there are certain accounts that you flag up and you think, okay, that one needs checking. Okay, that's one that could be hiding all sorts that's going on in the profit and loss account. Okay, I'll come back to the intercompanies. Okay, you might want to check other payables such as PAYE if you had that. Okay, you just want to check that all these entries have happened during the course of this month. So have they happened correctly? Is there anything that we're hiding here? So let's go on to accruals. Let's have a look. Okay, so we've made an accrual here for Scottish Power for £150, dated the 30th of April. Why have we done that? So what have we done here? This is in the accrual account. Okay. Well, what's happened here is we have not had the bill in April from Scottish Power for electricity. So we've used the power, which means we owe the money, which means it's a liability. So what did we do? What's on the other side of this journal entry here? I know what we did is we entered an invoice for £150 on the 30th of April. So that would have gone into the profit and loss account as electricity. And it's showing on the other side in the accruals account. I'm comfortable with that. I'm happy with that. That's controlled. Just to show you even more, if you click on it, it's actually going to show you actually the journal entry. You can see that I've made a manual journal for it, but it's actually showing the initial invoice that was entered if you click on it there. So you check your liability accounts and any asset accounts, suspense accounts, anything in that general ledger that has moved in the month. You just go through it account by account and just being comfortable with everything there. And then you do your intercompanies. So I'm just going to show you your intercompanies. So go back to general ledger. Now remember, the intercompany account is only going to be showing in this company on the one hand, and then the other company on the other hand. So if we use April as an example, and we go to the intercompany accounts. Okay, sorry, excuse me, let me use March as an example. And here we've got Fab Clinics has got an intercompany transaction in March with the investment company, the property company here. Okay, so let's have a look at that. What's happened here is that £2,000 was transferred from one company bank account to the other company bank account. Okay, there was obviously a cash need from one company, so we just literally transferred the cash from one bank account to another. In this case, we had an issue with a tenant. The tenant eventually said she could pay rent, and we decided we were going to take that rent over the credit card, over the debit card, over the phone in order to get it. But only this company had a debit card facility. So we've taken the money here. So we've taken the money in Fab Clinics, but actually it's RC Woodhouse money. It's another company. So what you can do here, and this is what I do every month with all my intercompanies, is I export them. I get this report up and I export this report to Excel, which would show up there. And then I double click it and open the Excel file. And I open all the intercompany accounts from all the companies I've got for the same period of time. Okay. And to show you that, I need to stop sharing this screen and share a different screen. I'm now showing you this screen. And this is the same report, just in Excel format. I'm going to try and make it a bit bigger for you. Bigger still, if we can. Okay, there it is there. So here we can see that 23rd of March, this is Fab Clinics Company, and the account is the intercompany with RC Woodhouse. And these are those transactions. I'm going to stop sharing that screen, and I'm now going to share another screen with you. Again, make it bigger. This now is RC Woodhouse intercompany, company, and the intercompany account with Fab. And you can see that exactly the same figures are here, but if your memory serves you correctly, they're in the debit column of this company because they were in the credit column of the other company. And that's what you're controlling. So what I do is I open all of these spreadsheets for all the intercompanies, put them all on one screen, and I literally just, electronically tick them off like that. Okay, from everyone until everything is ticked off. And invariably, I will find that there are entries on one side that don't exist on the other side. Every single month I find that is the case, because one company has purchased something on behalf of another company. It's been entered into zero on one company, but it's not been entered into zero on the other company. And it's this intercompany control that then tells me, and what I simply do is if this one doesn't exist on the other intercompany, I literally just copy and paste it. And I put it below the line here, paste it below the line on the one where it's missing. And I know that everything that is then below the line is work I have to do in zero, entries I have to do in zero in order to bring the intercompany accounts fully up to date and balanced. So what I tend to do is whenever I do my intercompanies, I always do them for the two previous months, so that they also control the corrections that I'd made after I controlled it a month ago. So I just always keep rolling my controls. So I'm every month going back 2 months and controlling it, so that I'm confident that nothing is missed. So we'll stop the share there. And what I can do is, just with a quick final share, hopefully this, I can show you that those are the month-end controls that we've just been through. It's not that many of them, and I'll send you that document, and that is basically what you do to control your zero. And once you've controlled the zero, you can then go in and have a look at your profit and loss in your balance sheet, knowing it's going to be correct. So that brings me to the end of that structured session. Any questions on that?
Yeah, I have one. You have in your bank accounts the service charges from the bank, and you have it in green like Reconcile, but there's no invoice or anything. You just click Reconcile and it's understood that there's not going to be any invoice. So
Yes, exactly. I mean, the bank will take charges. They do sometimes send you an annual bill for those charges because you need that for your personal tax return, because of the way that they deduct tax at source. Sometimes, oh, excuse me, I'm not thinking, I'm confusing it with interest. So sometimes they might have, you might have interest paid into your bank account. And again, you won't have an interest statement to attach to it. And it comes at the end of the year. But with those charges where they don't have anything to append to, then you just literally code them directly from the bank account when you're doing your reconciliation and just leave it at that. What I tend to do is I establish a rule so that the rule just picks it up and I just click OK.
okay.
Yeah.
Good. You have also in your balance sheet like an account for deferred payment, like salary payment. I believe I saw.
Yes, one thing we haven't covered is payroll. In Xero, there is a separate payroll function that can go through on the basis that many people in property don't have employees. Then I haven't covered the payroll function in these sessions. It's something we can do in a future session if need be.
That will be awesome. Yeah.
Yeah. Do you have employees that?
I do because I have the construction company, so I have employee. Even I'm an employee. I put myself as an employee. Okay. So yes, and also if I'm looking at sourcing and I have a BA or some, you never know if you're going to have an employee down the line.
Well, there's two main sort of significant areas that we've not covered, and one area is the salaries area, and the other area is VAT. Actually, VAT is very straightforward. I mean, once you've set it up properly as a VAT registered company, so long as you have on each entry that the VAT rate is correct, it defaults to 20% on every entry, but maybe you might have a utility bill which is 5%, or you might have something to do with your company car where it's 50% reclaimed, so you have to change the VAT rate on some specific bills. But actually, when you come to do the VAT return in Xero, you just literally click VAT return and it prints it out for you. It shows you the VAT return. And then you check it and then you click submit, and that's it. It goes directly to HMRC. And if you've got the direct debit set up with HMRC, a few days later they take the money. So the VAT return can literally be a 3-minute job. If everything else is properly entered in Xero. With payroll, a little bit more complicated, routines involved in doing so, and I've not covered that at this stage.
It will be great if in future you do one session on that. How do you manage, I mean, a lot of invoices that we receive, they're emailed, so you can really save in whatever folder you have and then later on attach to it. But there will be a lot of them that have their like receipts. So do you use the app directly to take a photo, input it in whatever you need to input it, so forget about that receipt and throw it away?
Well, in Xero, you have a specific email address for every company. It's in settings. I won't show you because it'll take time to find it. And it's
okay.
Basically, you go into settings and there's an email address. That email address you use. So you put it in your contacts, you put it into your scanner. And so if I'm at the self-checkout at Tesco, I would take a photograph of the receipt and I would just email it directly to that email address. Now, you could go into your Xero app and take a photo of it and put it in that way. So there's different ways of achieving the same thing. If the invoice comes through the post, It's on my desk. I just stick it on the scanner and I scan it directly to that email address. Both those ways puts it into files waiting to be appended. The other way you can do it is, and perhaps I will share the screen and show you this, is that in Xero, when you do enter a bill, so when you enter a bill in Xero, when you go to attach that, that's the library with all the bills in it, there, that you've sent by email to Xero, but you can upload it directly from your Explorer. Okay, so it could be in your downloads folder or anywhere else on your computer, and you can just upload that file directly from there.
Okay, cool.
Can I just make a suggestion?
Yeah.
Rupert, if you click on Fab Clinics, where the down arrow is there, HubDoc is a new feature which Xero called me about. You might have had a call as well, Rupert.
I've heard of it, but I've not looked into it yet.
So I use Receipt Bank. Receipt Bank is phenomenal. I think it uses AI and it will read your email. You can email it an email with invoice on, and it will open the invoice, read the info out of that. You can then in Receipt, I'm talking about Receipt Bank, but HubDoc is meant to be an equivalent for it, which is free and provided by Xero. But these bits of software are phenomenal. They'll read your email, they'll pick out what it is, they'll look through your chart of accounts, and they'll start to match things up. The AI in them starts to learn. So as you get a BP petrol receipt and you code it a certain way, it then starts to learn. And what it will do for you then is it will create all your bills for you based on the emails that you forward to it, either just reading the email itself or by you having an email attached to it, or like you mentioned before, where you're taking a photograph of a BP fuel receipt and then you just chuck it in the bin. You can send that to Receipt Bank, and probably DocHub is just as clever, and it will do the same. It will read it and it will create your bill for you.
I mean, productivity, it just gets better, and here you've got App Marketplace as well. It really depends on the size of your business, the number of transactions that you're doing, but look at all this, all of these apps and partner companies all work together with Xero. So there really is a way of integrating everything you do in order to make it very productive from that point of view. Thank you for that. I wasn't aware of HubDoc.
I've not tried it. I'm going to play around with it because I paid for Receipt Bank for a year, so I'm not going to switch over. But I think in October my subscription finishes, and then I'm going to play around with this.
And of course,
it's free.
One thing that's important to mention, of course, as well, is that you've got the help function here. So you've got Xero Central. You can type in. There's lots of frequently asked questions. There's lots of ways of just saying, well, look, how do I if we type in prepayments, for example, how to record a prepayment, and so there's lots of step-by-step coming in here, and overview, what to do. Okay, so lots and lots of step-by-step in Xero to help you along your way. There is also video tutorials. There is all sorts of support, and there's also a forum. So if you type in questions, you can often get in the search, you can often get results from the search, which actually takes you to the forum where people are discussing. Be mindful of the dates of the discussion on forums. Sometimes they might be 5 or 6 years old, and Xero has brought things up to date since then. But generally speaking, some really good help. And it is so intuitive. It really is just a case of the more you click, the more you work around, the more you'll find it. And here now we're sharing, you can see the payroll has its own of the 1, 2, 3, 4, 5, payroll is one of those. So that's you know, a completely separate function that can be used. Great. Any more questions? Right, fantastic. So what I'm going to do is I'm going to...
This is awesome. Thank you so much, Rupert.
Yeah, thank you, Rupert.
Amazing.
What I'm going to do is I'm going to share that document for month-end routines with you.
Great.
I'm going to ask you for any further feedback and questions in order to determine whether another session can be put on or not, because obviously, with the exception of payroll, there's little more I can do in a structured session, so it's going to be more dealing with your specific inquiries and questions from that point of view. And that if anybody who is starting out in Xero and relying on these sessions as a prompt to get going and needs a little bit more support, then come on to me. If we need to get things set up, then I may have access to support that can help you get up and running as far as that's concerned. So, brilliant. Thanks very much indeed.
Thank you.
Thanks again. Bye.
Have a nice day. Bye.
Thank you.